What's going on, everyone? I want to talk to you today about my dividend account, how I am personally, just me, weathering the storm right now, and if we go deeper, my allocations, how I'm pulling these things to live off of, and just my plan going forward. This is Mike, the Tactical Stock Scalper. All right. First, I kind of want to talk about investor sentiment, and it's been fascinating watching people as the market was ripping. All kinds of people were adding risk upon risk as the market was ripping, and I was getting kind of like nervous because we know the inevitable pullback, correction, crash, whatever was imminent. We didn't know when. We just knew it was going to happen. So I de-risked for months, right? I quit putting my own money into my dividend account. And anytime things like SVOL specifically, YMAG, AMZ a lot, and Nvidia were all above my cost basis for months on end, I just banked that cash, put it in a high yield savings account where I would feel safe of putting it in there. That way, when the inevitable market correction or crash or whatever would come, I would be fully prepared for it. And now we're seeing people, right? So they add a risk upon risk as the market's going up. And now, as the market's going down, I'm preparing for the inevitable, whenever that happens, run back up. And I'm seeing people de risk as the market's going down, right? Shouldn't we have maybe de risked and sold off positions for profit and stuff as the market's ripping, and then add risk as the market's going down, waiting on the opposite, the inevitable run back up? I don't know, just me, but fascinating watching investor sentiment and all different kinds of investing, trading spaces. So let's start here with my SQY position, and I'm so like really happy, so happy I did this. I I got this from John, the cover caller. I got this idea from him way back in the summer to create a free dividend position out of trading profits. And I'm so glad I did that. So I made mine out of SQY. And all I did was when I made a trade and the trade went in my favor, I took the profits, no money out of pocket, and built SQY. Now, as the market is dropping, it's like an annuity every month. It didn't come out of pocket. The money is only out of profit. So every month I'm getting paid profits still from my SQY position. So I will pull 100% of those dividends to help cover living expenses when that dividend comes out here in March, particularly if the market keeps falling. I am overweight in SVOL. SVOL is my largest position by far, and it's not done bad. I mean, it's like pretty much lockstep with the markets in the way it's falling. So at the end of the month, if we continue to fall, I will pull 5% from my SVOL position. That will help cover expenses. My Nvidia is super close, like in May. I should have that position. That whole position paid off. The ROI totally done in May. Depending on the dividends, but it looks like it's going to be May because we got a much bigger dividend than I anticipated in February from Nvidia. So that helped a lot. So it looks like May, that's going to be another annuity, meaning everything coming from Nvidia from May until Nvidia is done being Nvidia, till it goes out of business or whatever, or reverse splits 20 times and then I finally get down to nothing, right? It's all going to be profit till that stuff happens. So that's wonderful. So now that gives me a lot of flexibility when Nvidia comes. So like right now, I can only pull 5% from it to help with living expenses. So when it happens in May and it's all paid off, I'll be able to pull 100% of Nvidia if I feel like it. In addition to SQY, if the market keeps going down, because again, that is just profit over profit. YMAG, I'll be pulling 5%, AMZ 5%. That's it. And then building into those positions, getting my average cost lower, waiting on the inevitable run back up. Now we know with covered call funds like AMSI, YMAG, Nvidia, whatever, they're not going to go up to their level of their underlying. We know that. If you're in these funds, you should know that. They will be capped, especially on big, large moves, but they will go up, and then you'll have the dividends that you made all the way down, and then on the way up to help compensate. And so I'm super excited about that. I added to all those positions on Friday. Also, because we're at the 200 EMA on all indices, so that's a pretty good risk reward for me to average down there. And if we drop more, I'll wait till another level hits and then average in again. That's it. Um, I added JEPQ on Friday. That's going to be like my growth fund. If whenever, not when the market turns around, not if, when, who knows? When it turns around, JEPQ is now going to be like a growth fund for me because JEPQ catches great share price appreciation. I don't have a ton in it now. I just started buying in Friday, but if it finds a bottom here, if the market finds a bottom here at these levels and starts stabilizing, and then eventually during the summer run up to new highs, that'll be great. I'll be able to pull those dividends 100%. See, I don't add to my positions above my average cost. So that way, I have the luxury when it gets above my average cost to pull those dividends 100%, like I did this summer and then the fall and then early winter before January, before the market took a big crap, right? And we've been down ever since. So um, yeah, it's been great. So I'm just going to ride out the storm using hedges, which don't make a ton, but it's some kind of revenue. Scalping, which brings in more revenue for me than hedging. And so using those two to help pay off living expenses. SQY 100%, pulling that. And then little 5% here from YMAG, Nvidia, and AMSI. And then 100% from SQY. And then when Nvidia gets to my 100% paid off position in May, that if the market keeps dumping even to that point, that will give me the freedom to do that because again, that position is all based out of profits. And if we find a bottom here and the market goes back up, and I'll be very glad I added in at these levels. Um, and then it'll get back above my cost basis on all those funds, and then I'll just do what I did in the market ripped up. Pull the dividends, put them in my high yield savings account when I get above my cost basis, and just do it all over again until the next pullback correction or crash. Market going up, prepare for a correction. Market going down, preparing for the run back up. Whenever these things happen, we don't know. We just know they will. Hope you enjoyed it. This is Mike, Tactical Stock Scalper, out.